With this simple yet very profitable supply and demand trading strategy, you can easily make 50 pips from any market. Whether you want to trade Forex, you want to trade indices, and you want to trade gold, this strategy will help you make more than 50 pips from every single trade that you are going to take. For this particular example, I am using gold 15-minute time frame, but it is applicable to all time frames and it is applicable to all the markets. Now, before I show you the trade examples, let us first understand the core basics of this strategy. Let us first understand what is supply and what is demand and how we can use it to find the trade opportunities. I am going to keep it as simple as possible so you can understand it even better. And not only that, but you can also implement this strategy right after you watch this video in the live market as well. Now, the first thing, what is a supply? A supply is anything that makes the market to move down. When there is no demand and there is high supply, that means the price is obviously going to drop. It is the simplest definition of supply. And supply zone, they normally looks like the resistance zone. That means any market price that gives the resistance to the market to drop is actually considered as supply. And vice versa, anything that gives the support to the market to go up is considered as demand. Or in simple words, when there is a lot of demand for something, then its price will automatically start moving up, similar to the gold and similar to the oil. During the COVID, when there was no demand for oil dropped because of high supply and no demand. But right after things started to get settled and people started to get oil for their regular use, the demand started to rise, hence the price started to move up. This is the simplest definition of supply and demand. But for this example, we are going to take a resistance as supply and support as demand. It means that this area of the resistance will be considered as our supply area, because this was the price which made the movement to the downside. This support level will be considered as our demand area because this was the price level which really made the movement to the upside. Now, the most important thing here is that we are only going to consider any supply or any demand level helpful for us to find the trade opportunities in the market when there will be a big drop or when there will be a big rise of the market movements. It means that we are not going to consider these kind of movement and we will not be taking this as our supply area. The reason being, just look at this movement after the market started to drop. It was slowly going to the downside. So when there was a lot of supply, why the market is slowly going to the downside? Same case with the demand level as well. If there was a lot of demand, then why market it moved up little by little to the upside? So that means we are not going to consider these kind of demand zone and these kind of supply zone. So what kind of market movements will be considered as our supply and demand level? These kinds. You can see how well we moved up to the upside from this level and we created a higher high. These kind of demand levels will be very useful for us because now we know that this price level was the area from where the market really pushed to the upside. We made a higher high. Same case here. When we made a big drop after this movement, after we created this small resistance, when we made a big drop, this will be considered as our supply area. When we made a big movement to the upside from this support level, it will be considered our demand zone. So these kind of demand levels and supply levels we are going to need if we want to take the trade opportunities based on supply and demand strategy. Now let me show you some trade examples. I hope that you guys understand the core basics of supply and demand. You guys now understand what is a supply, what is a demand, and what kind of demand levels and supply levels we are going to use in order to take the opportunities in the market. So how to use these kind of demand and supply levels which really made the movement to the upside or to the downside as our levels from where we can potentially have a trade opportunity. Now here is my first example that I want to give you. This was the demand area which really made the movement to the upside. From here, market started to go to the upside. So we are only going to mark it for now because we want to have our key supply and demand levels marked all the time. So this was the demand area which made a strong movement to the upside and we can clearly see the movement. So we are going to mark it and we will wait until the market reaches this level. Now obviously there are going to be a lot more demand levels later on as well. There are going to be a lot of supply levels as well. So what happened? The market, it made a movement to the upside. We were going up and up, but we never really made this kind of a movement. Yes, it looks like that we made this movement. This can also be considered as our demand level. So we are going to mark this level as well right here. It is our first demand level and it is our second demand level. Now here is what we need to always do if we want to look for the opportunities. When there is a demand level or there is a supply level, let's say for this example, we are considering these two levels as our demand levels. When we created these levels and market made a strong movement to the upside, after some time when we will create higher highs and higher lows, we want the market to come towards these levels, but they should come down with a lot of struggle and they should start rejecting from this level. Now when after we created this higher high here, when market it came down, it was coming down with a lot of struggle. What I mean by struggle is that we need to compare the left hand side to the right hand side. Now there is a clear difference between how the market went up from here to here and how the market is dropping from here to here. We can identify the difference easily. Market is taking quite a lot of time to go down from here to our demand level. But we do not only need the struggle inside the movement, but we also need the rejections. And is there any rejection at this level? When the market it came towards this level, there is no rejection. Market never got rejected at this area. Hence, that is why we never really respected this demand level. And we dropped to the downside, and afterwards we even dropped to the downside. As there was no rejection at here, so market never respected this demand level, and we did not make a movement to the upside after getting rejected at this area because we never really got rejected at this area. Now would you consider this level as our key supply level? The answer to that question is absolutely yes, because market did make a strong movement from here to here before it started to get slow afterwards. But we did make initial movement to the downside with a lot of momentum to the downside. So we are going to consider this level as our key supply level, and we will wait until the market come towards that level, starts getting rejected from that level, and we see any opportunity. So we are going to mark it, and we will wait until the market comes towards that level with a lot of rejection and with a lot of struggle. So from here, when the market it started to go up, look how it is going up. We can clearly see the difference between this movement to the right side of the movement. There is a clear difference between how well we went down versus how long we are taking to go up. So we need this kind of movement, a lot of struggle in it. That is the one thing. Another thing, when it will reach towards this level of supply, it should start getting rejected at this area. So when it came towards that level, we can clearly see how weak the market is going to the upside. We clearly have a lot of struggle in the upwards movement. And not only that, the other thing is that when we reached that level, we got rejected once, and market it tried again here. We got rejected the second time, and the moment we got rejected, look what happened. The market it started to go to the downside again. So where we need to place our trade and where we need to place our stop loss and take profits. As this was our supply level, which really made the movement to the downside from here to here, it's our lower low area, right? We have our key supply level and we have our lower low. When market it came towards that level, we got rejected once at here, and we got rejected the second time. After the second rejection, anywhere we place our trade here, put our stop loss just above the rejections area, and our target at lower low is absolutely a very beautiful trade opportunity. So anywhere we place our trade here, stop loss here, and our target at this area is definitely a very nice opportunity, and look how well it performed. We made over 2.83 risk reward ratio from this trade. Now it's not the only example. We had this demand level here as well, and the market it hasn't really tested this level yet. When from this level, market made a strong movement to the upside. If we compare the left hand side to the right hand side, we can clearly see the difference that how the market, after we created this overall higher high area at here, how the market is going to the downside. It is taking a lot of struggle, a lot of time to go to the same level from where we started to go up. In just couple of strong movements to the upside, we only stopped once at this area, and look how strong the buyers made the movement to the upside. Now compare it to the right hand side, and now look how weak the sellers are going to the downside. We are taking a lot of time to reach towards that level. So the first thing that we need a lot of struggle inside our movement. We have that here. The other thing is when we will reach this level of demand, we need couple of rejections. So let's see if we have a rejection or not. And here you can see when we reached here, market, it made a big rejection here first. Then it came towards that level again. It retested it and then it made a second rejection here. So when we made a second rejection here, anywhere we place our trade here, put our stop loss just below the rejection, and our target at that higher high area is definitely a very nice opportunity. So this is the second example that I just showed you using this simple supply and demand strategy. Now let me show you one more example, and it will be again for the buy side. So market, it made the movement from here. Again we have this supply level, but we haven't really tested this level yet. We again have our supply level here. And yes, we did tested it and we started to drop. But as we created this lower low area after this supply, the key supply area, we made this lower low, so we haven't really came towards that level, so we are not going to consider this opportunity yet. But there is one more opportunity, and we have that here. From this level, the market, it really made a strong movement to the upside. We created a strong movement from here to here. We created this higher high area. Now compare the left hand side movement, this movement, to the right movement. There is a clear difference between the left hand side movement from this demand level to the right hand side movement. We are taking a lot of struggle to go down. And when we came towards that level of demand, we got rejected once at here, then we got rejected for the second time. And when we got rejected, the market, it started to go up. So anywhere we place our trade after this rejection, put our stop loss just below the rejection area, and our target at higher high is definitely a very great opportunity, and it was around 1.94 risk reward ratio trade. So I hope that you guys understand how simple the supply and demand strategy can be if you really know how to implement it in the right way. I just showed you the right way to find the key supply level, key demand level. Then wait for the market to make a pullback towards that level, but with a lot of struggle. And when the market will reach towards that supply level or demand level, wait for a couple of rejections, then take the entry with confirmations. And the confirmations are the struggling movement and couple of rejections. So this is how you can use this supply and demand strategy in any market, whether you want to trade gold, whether you want to trade indices, whether you want to trade Forex or cryptocurrencies. So let me know, what do you think about this strategy? Let me know in the comment section, and I will see you guys in the next video. Thank you for watching.